Oil and gas has been on a major roller coaster ride starting in March when we had the COVID-19 lockdowns and the oil price war between Russia and Saudi Arabia in an attempt to destroy the shale oil and gas industry by keeping them in the red, by flooding the oil and gas industry with oil. And I'm going to talk about oil and gas news, what's happening in the news today, the current production levels, and a few other statistics that would interest you if you are in oil and gas, whether as an investor or in the oil business. And if you like this channel, please subscribe. Right now, WTI crude is trading at $40.73 a barrel. Brent crude, $42.97. Bigger than expected crude inventory draw boost oil prices. The American Petroleum Institute reported on Wednesday a major draw on crude oil inventories of 5.4 million barrels for the week ending October 9th. So you're going to be seeing a lot more draws as we decline in production and increase in daily demand. U.S. shale oil output dropped 123,000 barrels to 7.6 million in November. U.S. shale oil output is expected to decline by 123,000 barrels per day in November, the biggest drop since May, to about 7.6 million barrels a day, the U.S. Energy Information Administration said in a monthly forecast. So 123,000 barrels of oil decline in shale next month is expected, okay? And quite simply, this is the effects of all of those shale companies filing for bankruptcy, laying off all of their soldiers, and this supply-demand fear affecting the world globally because of COVID-19. You're going to see more of that because shale oil and gas is only profitable at $60 oil. They cannot survive in this climate. That's why they're having to lay off people, okay? And so the Saudi Arabia and Russia, that was their plan from the beginning. In March 8th, when they started that oil price war, it was really to destroy American shale oil and gas. And the reason why is because shale oil and gas is so abundant, we became the world's biggest producer, outproducing Russia and Saudi Arabia for the first time. But because of that, Russia and Saudi Arabia cannot control oil prices any longer, because if they curb oil output, if they produce less oil to try to stimulate and increase oil prices, we just foot the bill with more shale oil. Okay. And so Saudi Arabia and Russia knew the only way to destroy shale was by keeping them in the red, by keeping oil prices at a level to where it's not profitable. And it's easy for them because Saudi Arabia could produce a barrel of oil for $5, where shale is $60. Very easy game for them to win. The shale patch bankruptcy crisis isn't over yet. As many as 44 oil and gas producers filed for bankruptcy as late as September. Those 44 bankruptcies in quarter three could be a much lower number compared to the wave of filings expected for fall. So we're expecting a lot more bankruptcies this last quarter, and for good reason. I mean, they're not profiting. They're hurting tremendously right now. Now, this is the energy bulletin for the October 13th, 2020. I love their bulletin. It's incredible. You guys should look these guys up. The EIA estimates that global consumption of petroleum and liquid fuels averaged 95.3 million barrels a day in September, down 6.4 million from September 2019. So here's the thing, guys. Everybody was expecting this COVID to destroy demand. Some people said, hey, we're at 70 million a day. That never happened. Some people said that, hey, we might drop as low as 50 million barrels a day. Look, here it is October, and we're already at 95.3, which originally we were at 100 million barrels. Okay. So we're 6 million away from being back to pre-COVID levels. Okay. The EIA forecasts that global consumption of petroleum liquid fuels will average 92.8 million for 2020, down 8.6 million in 2019, increased by 6.3 million. EIA's forecast for consumption growth in 2021 is 0.3 million. So originally it was a million a year. Now we're to 300,000, which is a good sign because everybody was expecting a decline, and we're actually increasing. Let's see here. The cartel continues to be optimistic about the long-term prospects. Now, cartel means OPEC. Long-term prospects for oil, and rejects any notion that demand for crude will peak in the foreseeable future. According to OPEC's latest world oil outlook, oil demand is projected to increase from nearly 100 million barrels a day in 2019 to around 100 million in 2045. The cartel is counting on non-OECD countries to increase demand. The 2020 report forecasts that oil demand in non-OECD countries will rise by 22.5 million barrels over the next few decades, from nearly 52 million in 2019 to 74 million in 2045. Listen, guys, everybody wants to be like America. Yes. Okay. They want to do the green thing. All right. And so, but these other countries can't afford green technology. We're the richest country in the world and we can't even afford it. I mean, we're talking about trillions of dollars. We got to upgrade the grids. We got to advance in battery technology. We got to do a lot of work before we could go green. What most people don't realize, a very small fraction of our energy comes from green. A very small fraction. We're ran by fossil fuels. The most important energy that powers the world is fossil fuels. Guys, listen, you're walking away from fossil fuels based upon what I'm reading in the news, based on what Biden is saying in the left. Look, it hasn't happened yet, guys. We're years and years away from fossil fuels not being an important commodity. It's the most important commodity in the world right now. India is expected to be the largest contributor to incremental demand in coming years, adding around 6.3 million barrels a day between 2019 and 2045. Oil demand is OECD countries, which are taking climate change seriously, is predicted to plateau at about 47 million barrels a day during 2022-2025 before starting a longer-term decline towards 35 million by 2045. Okay. So oil and gas is here to stay for many, many more years. India demand is growing. China demand is growing. All of these other countries are growing for the demand for oil and gas because they are so far away from being anything like America. We use more oil per capita than any other country in the world. And China and India and these other countries are trying to catch up. This is the American Petroleum Institute facts at a glance. Total U.S. supply of crude oil, natural gas liquids, and other liquids in August 2020 is at 16.1 million barrels a day, down by 2.1 million this time last year. Okay. U.S. crude oil production for the month of August is 10.4 million. This time last year, we were at 12.4 million barrels a day. So you could see a major decline in production, quite simply because the shale industry is falling apart. Now, this is a 5-year chart here. Okay. As you can see here, we were at 13 million, close to 13 million a day in production here in the U.S. And then we declined to roughly 10 million a day. And then we increased a little bit. So this is the 5th consecutive year that we've declined. Now, obviously, none of the major events of COVID and the oil price war happened 5 years ago. This all started in March. So why are we seeing a decline? Well, shale oil and gas was already on the decline. They spent billions and billions of dollars. It was a rat race to develop as much shale as possible. So all the premium locations are gone. Okay. Now they're having to drill and develop shale on the outskirts where it's not as lucrative. Okay. Not only are we not able to produce as much oil, every well that is drilled, every barrel of frac fluid that they pump in the ground, that causes emulsion. It causes more water in that structure, diluting the formation. And so every barrel that you produce, you're getting more oil out of it. So, and then shale naturally declines in nature because the porosity in shale is very low. A decline curve means day one, that well might produce 5,000 barrels a day, but then a month later, it might be producing 2,000 barrels a day, and that decline never ends until it gets to zero. So here's the thing. Every well that's been drilled from 2012, when shale industry really started to take off, until today, is declining right now at a much faster rate than conventional oil, much faster. So even if we didn't have an oil price war, even if oil prices didn't drop, even if COVID-19 didn't hit, we would be on a decline. And we wouldn't be able to keep up with that decline. We wouldn't be able to drill enough wells to keep up with the decline. So we peaked. And that decline started, and COVID and Russia Saudi Arabia oil price war only sped up the inevitable of shale decline. The current Baker Hughes rig count, U.S. as of October 9th, we're at 269. That's an increase of 3. And this time last year, down 587 from this time last year. That's naturally because the shale industry is falling apart. Russian oil looks to slash drilling even more next year. The nation's producers, which have reduced oil drilling by as much as a third so far this year, may cut it by another 20%. So that'd be a total 50%. Okay. Look, everybody is cutting back on developing oil and gas. And it's simply because there's less investment in the oil and gas industry. Everybody is getting inundated and flooded with Biden's information regarding the Green New Deal and their energy plan and the reduction in emissions and all of these things. And everyone thinks, oh, fossil fuels is game over for them. Well, that's because they have, they're able to raise over $300 million a month, and they're spending all that on advertising, and it's going into your email box. You're getting texts about it. You're watching YouTube videos about it. You're reading in the news everywhere. And the media is on the side of the left in comparison to the side of the right. So, of course, you're going to see everything about global warming. Of course, you're going to see everything about green technology. And you believe the lie like so many others. But the truth is that fossil fuels is the energy of choice that is powering the world. It's the cheapest fuel source right now as of today. There's no other cheaper fuel. And it's in the grand scheme of things, there's really nothing else right now to replace it. Green technology, that's a future thing. It's not even here yet, guys. Tesla looks really cool. They have some amazing press releases, amazing cars. You've seen it. Their cars cruising around. But at the end of the day, most Americans can't afford a brand new Tesla. Third world countries can't afford a Tesla. So going green is, if that means buying a Tesla, well, how many people own a Tesla? I mean, look, guys, what you're reading in the news is far from being accurate. BP shares plunge amid low carbon plan and slipping oil market. Well, that's because British Petroleum Oil Company is trying to go green and trying to cater to the left. The left doesn't want oil and gas. The left is not interested in fossil fuels. British Petroleum, get rid of your oil and build an electric car. Maybe that will cause people to be interested. All right, guys, I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe, and we'll talk soon. Thanks.